Yesterday, Homer sent me a video that the sum total of it was that as a result of corporate debt and increasing interest rates and the flipping over of the loans that they have, that many companies are going to go bankrupt, which is going to create a negative effect on the stock market, and it's going to affect any and all stocks. Well, I thought, I need to dig into that deeper. But first, let me show you what I took away from this video that I think is important. This chart here shows the increase in interest rates as a result of what Jerome Powell is doing. So it's showing you in 2012, interest rates were about 6%. But back in 2020, the average corporate interest rate was about 4%. And today, it's 10%. Well, that's not really a problem until these loans flip over. And they flip over usually about every 2 to 3 years. So in this chart, it's showing when these loans will mature and have to be re-upped. So you can see that in 2023, it's about $500 billion will mature. And then in 2024, it goes up to about $825 billion. In 2025, it gets up to over $1 trillion. And then in 2026, it gets over $1.2 trillion. And then in 2028, it gets all the way up almost to $1.4 trillion. So with that in mind, there are going to be a lot of companies who are going to go bankrupt. So what I then decided I need to do was find out how many of the stocks that I have in my BUS 12 and BUS 13 portfolio are going to be exposed to this and could basically close their doors as a result of interest rates going up, and as I understand, they will stay up. So what I did was go into the financials of each one of my stocks and saw what their exposure was to this increased cost of debt. And I want to get into that right after I share this is not financial advice.
Best of Us Investors presents Kerry Griegmeyer.
Okay, here I have listed all the stocks that are in my BUS 12 and BUS 13 portfolios. This is their current price. This is their current debt, okay? Then what I did was say at 4%, this is what the interest they're paying each year on that debt. Then I says if a debt goes up, it has to be renewed at 10%, this is the interest they're going to have to be paying on that debt. This is their current income in 2023. Their future income will be reduced by the increase from, in Apple's case, $3.7 billion in interest to $9.3 billion, and it will be reflected theoretically in their future income. And I then said, well, how much will that represent? And it says it's a 6.2% decrease in Apple's income as a result of the refinancing of this debt that they have in 2024, let's say, okay? Then what I said was, okay, what's their free cash flow? And that is to say, if that interest rate goes up, how much, if not all, of that debt could be paid off from the cash that they have in their coffers? And as what I see here is that Apple could pay 96% of that debt off with the free cash flow that they have. Then I went through and did that for every one of my stocks. How I did this was I went to Seeking Alpha, looked at their financial statement, then I looked at their balance sheet, and I came up with these numbers. And so you can do the same thing on any stocks that you have. You just go and look and find out what their debt is, what their interest they're paying at 4%, what they're going to pay at 10%, what their income is, how it's going to decrease their income, at what percentage it will decrease their income, and can they pay it off if they want to. So I guess the key numbers that I wanted to look at was how much is this going to decrease their income? And here I see that if, who is this? This is Advanced Micro Devices, has a current price of 103, a current debt of $2.57 billion. A current interest on that is $103 million. That will increase to $257 million, and that will decrease their income. Actually, it will bring it down to a negative income because their future or their current income is negative. It will make it even more negative. But I come over here and I say they've got free cash flow of $3.5 billion, so they've got more than enough to pay off their debt. Now, I'm not going to say how that influences me, because I know there are some other issues relative to Advanced Micro Devices that will determine how I handle that stock. One that kind of shocked me, in fact, I had to go back and look at it again and again. Here is Amazon. Amazon's debt is $74.35 billion. And I immediately looked up and said, how does that compare with Apple? Okay, their interest compared to Apple. Then I come over here and I say, look at their income. Amazon's income is $13 billion, as opposed to Apple's, which is $94 billion. Did you know that big difference? That's pretty shocking. So the increase in their interest as a result of the refinancing of that is going to have a 51% influence on Amazon's future income. So the next thing I said was, how much of that could they pay off with the cash that they have? And they could pay off 30% of it. Interesting. Broadcom. Interesting. Here's one that kind of shocked me too. This is Salesforce. Has a debt of $7 billion. Interest will go from $281 million to $702 million. Their current income is $1.58 billion. It will decrease by 36%, but they've got enough cash they could pay it all off. So what are you going to do with that stock? Google, look at this. They've got enough cash to pay off their debt 8.7 times. Don't need to worry about them. Meta, similar. Have enough cash on hand to pay off their debt fivefold. Well, why would they do that? Well, they probably got the debt right now at, as I said, 4%, which is cheap. So they will probably, as that debt matures, just pay it off. They're in a sound position. But then you see companies like, Modine, they only got about 10% of their debt in cash, and it's going to decrease their income by 21%. Let's look at Marvel. Marvel can only pay off about 34%, and it's going to decrease their income by 72%. That's going to guide me as to what I'm going to do in the future with Marvel stock. And you can see I've gone through every one of them. We all probably own NVIDIA. NVIDIA has a debt of $6.5 billion, but they've got $10.1 billion in the bank. So that debt can be paid off. And it's a choice. The problem is when it's not a choice. Here's Oracle. This shocked me. It's going to reduce their income as their debt goes up by 60%. And they only have 13% of their debt in cash. That's going to influence what I do with Oracle stock. So you can see some of these companies, even some of the small companies that you would think, oh, they're going to be in trouble. Let's look at, everybody loves Palantir. Palantir has a debt of $135 billion. Their interest at 4% is $5.4 million. That will go up to $13.5 million in expense, which will reduce their current income is a negative 65. It'll make it even worse to a negative 73. But they've got enough money to pay off that debt if they so choose to. So what do you do with Palantir stock? With all those things in play, understanding they're losing money, they're going to lose more money, but wait, they could pay it off if they want to. So this is the gymnastics that I went through to give me some perspective on what I should do with the stocks that I have. I suggest you do the same thing. You go in and spend the time, build your spreadsheet, go in, and this will help you make better investment decisions. Now, what I do is going to be relative to me. I will share, as I have in the past, all my buys and sells. As I have, I'm 65% cash because earlier this week, I bailed. I bailed because the economy, whether it affects Amazon or not, that interest rate goes up, it's going to affect the overall stock market. And I have to be aware of that. And I have to make good investment decisions based around that. And I can only do that if I've got the data and I've got the knowledge and I understand how to interpret the data to help me make a better investment decision. That's what we try to do at Best of Us Investors. Let me explain that a little bit further. In July, we launched our website. It's bestofusinvestors.com. I also put together a team. I have Mark, I have Trent, and I have Drew, who help me interpret the stock market. I then went and built that website. And so thus far this year, on what I call knowledge, that's other people's knowledge, the ability to build a website, the data that we subscribe to, I've spent $157,000 thus far this year to make me a better investor, and then to share that information, have the vehicle, the website, and the Discord to share that information with my tribe members. Now, what I then have to do, or what I decided to do, was pass that cost on to those people who want my help in interpreting the stock market, just like I just did relative to increasing interest rates. Now, again, how it's going to affect me, I will share with my trade alerts to those people who subscribe to our platinum level of the website. And then I will share also the graphs or charts like I just showed you on that website so that you can go back at your convenience and look at them and say, okay, I see what he's doing. I understand that. And I'm going to follow with him. In fact, what I'm going to do is I have some other stocks. This is you talking. And I'm going to do the same kind of analysis as he has. We're going to expand this beyond just my Bus 12 and Best 13 portfolios. And our next step is to incorporate this into ETFs so that we can dig into ETFs and people who don't want, I guess, who want more of a diversified portfolio, because mine's not diversified. I'm only in what I think the future of AI is going to be doing. But I know there are other people who don't have the risk tolerance that I do. So I'm going to take that same knowledge that I've acquired, that same $157,000 that I spent, and apply it to more diversified portfolios that might fit your investment plan better. Here are the levels that are available at the website. The website URL is right here, bestofusinvestors.com. And if you think this can help you, and if you think this makes sense to you and is worth the investment in it, well, then come join the tribe. And how do you join the tribe? You just get on the bus.